Amazon, Amazon, amazing song. Is this stock about to continue to fly? Or is it going to keep crashing and burning as the most overvalued stock in the tech industry? Um, Amazon obviously has its logistics, it has all its e-commerce, it has trying to get into more into the medicine side. Where can this company go to continue to be the behemoth that Amazon is? Well, we're going to find out right here with a stock analysis right here at Barry Charles. So we're going to look at the revenue, we're going to look at the EPS, we're going to look at P ratio, we're going to look at assets versus liabilities, the free cash flow, and so much more. And if you stay right to the end, I will give you the intrinsic value of Amazon right now and whether the stock may be a potential buy or not. Invest at your own risk, not financial advice. But let's get to it here at Barry Charles. Remember to like and subscribe to the channel if you like this video. Let's get to amazing Zone stock analysis. Yes, Amazon, how the company that keeps on giving. Amazon over the years has continued to be a stock that's been overvalued most of the time. It's just one of those things, and to give you a comparison to another tech company, Meta Platforms is normally undervalued compared to where it should be continuing on actual metrics. It's just one of the ways people just love Amazon. They love Tesla. But when it comes to Meta, not so much. But anyway, let's get a little quick dive into Amazon. Well, the revenue has absolutely skyrocketed from 232 billion in 2018 to over 500 billion, going up towards the 600 billion in 2023. So Amazon has doubled up, pretty much a double up, and continuing to grow and grow the business on that side of the field. But on the other side of the field, it's a very choppy waters. Impressive 2023 of 13 billion expecting coming up. Yeah, and from last year it was minus 3 billion, so it was a net loss. So this company again is a bit of a up and down stake as it tries to continue to grow as well as give you shareholders some money back. So that's why the earnings per share is only 2.17, so not really convincing there. We've got a high ratio of 63. Is it worth the 63? That's what you've got to decide at home. We look at the dividend. There is no dividend. It's clearly a growth stock at the moment, but this is another potential dividend stock. Probably another 5 years before we see that, but when the growth starts to die down, the stock will be probably paying you a dividend. But right now, nothing at all. We look at total assets at the moment. It's 477 billion. So it's gone up about 50 billion from 420 in 2021. So that's impressive. And the liabilities is a little bit of a concern that it's increasing up to 309 billion from 282 in 2000. Not a big jump, but still it's going up. You want to see it going down ideally. You want to try and have a lot less liabilities. But it's not a bad balance sheet, don't get me wrong. It's a pretty good balance sheet for assets versus total liabilities. Free cash flow. Well, this is something that Amazon has been absolutely all over the show for quite a while now. Currently at about $5 billion, but it was as low as negative 17 billion in 2022 when they're doing some investing. So it's a bit of a rocky road there in terms of that being consistent. We're not seeing that in the free cash flow. So, and it gets worse when there's long-term debt of $63 billion. 63 billion. So to me, that is not a very healthy balance sheet on that side, and I'm very concerned for Amazon shareholders on that side. They're going to have to start paying that down. With the high interest rate that they got at the moment, it's not good. Shares outstanding, 10.3 billion in 2000 right now. And pretty much since 2018, they've been diluting you as a shareholder. Up and up and up the shares outstanding is going. It's not good for you as an amazing song owner or potential owner. They keep diluting you, and they just keep issuing out more shares to either their employees or to the general public. It's not good. They need to do some share buybacks for this company to get yourself going the right way. What are the positives here for Amazon right now? Where is everything working towards? Well, they have a few issues trying to get this medicine over the line. Can they just deliver the medicine? with no issue at all. They have to do all these signing checks and all this. This is something they're trying to get through government. If they can get that through, ka-ching. But if it doesn't go through, then where is the growth coming from? The e-commerce side is just a little bit off. Obviously, AWS is absolutely keeping this company afloat. There is talk that maybe they'll split this up and have AWS over there by itself and have the e-commerce here as a different thing, so they get that going up. But yes, that's an interesting fact if they ever do that. There's a possibility because this company's getting so big, there's worry about this big conglomerate, just like Alibaba split off into its 6 different things. Amazon could end up in that situation going forward with the monopoly it has currently, and maybe it's time for them to go. So yeah, amazing song. This is so amazing. I'm looking at some of the metrics so far. I'm not very convinced at all. And for you at home thinking, what do I need to invest into this company? Well, the big question is, what is the intrinsic value of Amazon right here, right now? Well, I can tell you at home, folks, that it's let's have a look. The share price, we're going to say the share price is 143 from the time of recording. Earnings per share is 2.17, and we're going to look at a growth rate of 5% for this bond yield. So intrinsic value at a small 5% growth, you're looking at $41 a share. Well, basically $42 a share. No good. Absolutely no good. And if you look at 10% growth, you're still looking at only $64 a share. Even if you double the earnings per share, you do not even get the fair value. You're still at 127. So this company is way rich on a valuation standpoint. On simple valuations, there's other ways to push that up. For me, with a company this big, their free cash flow's got to go up and up and up. For me, it really does. They've got to pay down their long-term debt. Those are 2 big things. They need to start buying back shares. That's got to be a big one for them. And also, they've got to find growth in this business. They need to find ways to grow this business to take it to the next level. To me, that's where this Amazon's got to go. They've really got to improve the business, look at ways to making more and more money come down to the bottom line. Because if you've got 200 and say, well, yeah, what, over 500 billion in revenue, but you're only getting 13 billion at the bottom line, you're very low growth rate, between the revenue and your net profit. So that is a big concern for people wanting to invest into Amazon or have Amazon. So for me, at the current metrics, it's absolutely a no-brainer. For me, you can invest yourself. It's up to you. Don't listen to this random dude on YouTube. You make up your own decision when you invest into any stock. But Amazon is way overvalued for me to even look at buying this company. I can see the earnings per share to grow, but the growth rate is my concern. I don't know if you can get consistent 10% growth rate out of this company anymore. That's my concern. Obviously, if a dividend comes in, then that's a possibility to help the company, but then the growth story is pretty much gone when you start to add dividends into the portfolio. So that's probably something Amazon investors don't want to see. But if you added a dividend, then you'll start seeing maybe a bit more valuation there. But yeah, anyway, that's stock analysis and intrinsic value on Amazon stock. I hope you liked the video. Remember, I've got plenty more videos on different stocks with the same sort of stock analysis and intrinsic value just for you on this channel. Go check those out. Remember to like and subscribe to this channel, and have a great day out there.